Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. Okay, so I'm excited for our guest, James Tannahill. He's the president of private equity at Plocamium Holdings. So just really excited to learn about what you're doing, James, and just kind of hear a little more about the market. I know you guys are leveraging over 70 years of investment experience to drive long-term value for your partners and people that you're working with. So some of the things that James's practice supports is really just kind of being an experienced leader, focusing on a deep experience and expertise in healthcare materials, industrial sectors. I think they're backed by a family business that's kind of been in the manufacturing space for a long time. And he mainly leads value creation, growth equity, private equity investments in the healthcare and industrial markets. But James, that's just a high level overview, excited to have you on the show. Thank you for coming on the show, and excited to kind of maybe just have you share a little more about your background, maybe your early career, and just kind of walk us through you building Plocamium Holdings.
Sure. Joel, thank you so much for having me on your show. I've been following you for over a couple years now, and it's an honor to be here. Hi, everybody. Yep, I'm James, and as Joel mentioned, I lead Plocamium Holdings. Though I haven't always been leading Plocamium, I started off doing something else, sort of cut my teeth on Wall Street when I was working at an investment bank early on, fresh out of school. I was focused on advising clients and institutional investors, as well as biotechnology companies on strategy and operations, while at the same time really diving into the financial models and value propositions. And that was an equity research role, which I went through a training program and really understood financial modeling. I took that to a startup a couple years later who were trying to work with big data, machine learning, hedge funds in the private equity world. And we basically created a machine learning product where a portfolio manager, say at a very large hedge fund, a data literate hedge fund, could use this machine learning tool to get a granular understanding of a market segment or a particular company that they were interested in. And I did that for about a year, closely solving problems for clients in the investment community. And I was hired by Jefferies to lead their initiative, specifically on healthcare data, to pretty much solve a lot of their big corporate clients' problems when it came to enterprise data, the healthcare sector, and the intersection of the financial community. So that was a lot of fun. I did that right up until COVID, and got a call from a client back when I was at the investment bank called Vaxart, and they're a publicly traded vaccine company. And I really couldn't think of anything more exciting than to work at a vaccine company during COVID. And so I led their strategic finance, and we made a handful of acquisitions. I was employee number, I think, 17, and we grew up to 200 people. Then I went off to business school, and the past couple of years, I've been working at Plocamium, which is a subsidiary of a family business. It's been in my family for a long time. And what we do is we partner with lower middle market companies and also lower middle market investors to really do deep dives and fix problems, allow companies to become future proof. It's a win-win situation for us. We either invest in a company or we invest our time and energy in a company, get outside the boardroom, get on the factory floor, get beyond the spreadsheet and actually fix operations or enhance operations across different industries. And that's what I've been doing, and that's really what I enjoy
That's
spending my
great.
time.
So I have a little bit of background on portfolio management. I worked in FinTech for a good amount of time. I worked for a large data analytics company, and our clients were massive buy side equity research companies. So I think it'd be helpful for the audience to maybe just unpack equity research. And I'm assuming you're on the buy side, but there's also sell side equity. There's also sell side researchers as well. So maybe for the audience, it'd be helpful to kind of just unpack like your role doing equity research. Usually from my understanding, there's a portfolio manager, and then there's a bunch of analysts that are sharing investment ideas, and they recommend them to the portfolio manager. But essentially, it's the portfolio manager that's handling the weighting and the balancing the portfolio, really thinking about how the news is driving the investment decisions. And, I would hear about this workflow all the time, so people would, download the research reports, listen to the earnings calls on their train back home to Connecticut. But, tell us a little more about like your experiences. Does it sound familiar, or just kind of share your experiences of a day in the life of a research analyst? And would love to know a little more on if it was on the buy side or the sell side, or sometimes you wear both hats.
Sure. Yeah, Joel, you are absolutely correct. There are buy side and sell side research analysts.
Mm-hmm.
As you mentioned, on the buy side, typically it's a fund, and there's a portfolio manager who has under them or alongside them a number of analysts who do uh, produce ideas.
Mm-hmm.
And those ideas are investment theses, whether it's a single stock or um, a particular group of stocks or a basket. Their job is to conduct fundamental research, looking at the
Mm-hmm.
financials, but also, perhaps even meeting management and figuring out a long short strategy for this particular stock. And I was on the sell side, which in essence, I was working at an investment bank.
Mm-hmm.
Investment banks have oftentimes, the traditional investment bankers that everybody reads about on Bloomberg or in the newspaper,
Mm-hmm.
and sort of the lesser read about, but very important teams on the equity research side that produce investment research for not only the investment bankers, but for the institutional clients of that bank,
Mm-hmm.
whether it's a hedge fund. So the buy side research analysts could oftentimes read the research that the team I was working on and myself were producing.
Mm-hmm.
So it's a very rewarding career. And I would caveat those who have a technical education, whether it's undergraduate or postgraduate studies. If you're a medical doctor or a scientist, for instance, equity research on the sell side can be a tremendous career path where you can apply your scientific passions and acumen to the world of finance and commercialization of those science concepts. And so I found myself going down that route early in
Mm-hmm.
my career and surrounded by very highly educated scientists who were also focused on analyzing publicly traded companies. And, it's a mix of technical writing skills
Mm-hmm.
and financial modeling skills. Um, so it's a very attractive career.
Sure. And, tell us a little more about just the healthcare sector, from the times of COVID, analyzing vaccine companies. What were you thinking about? And, outside of just the traditional ones that everyone was getting, where were the opportunities? Were there just mergers happening where like IP was kind of rolled up together into a larger roll up? Or were there just ways that, just the standalone technology was just sold as like a a separate product to like other markets? I'd be curious to know how those deals got done, and kind of what your screening criteria was before you took those deals to investment committee.
Yeah, during COVID, certainly a lot of biotechs, whether you were a small to mid cap company or
Mhm.
a mega cap company, were evaluating the market for corporate development opportunities or acquisitions.
Yeah.
In particular, we were focused on identifying companies that had manufacturing assets. And that means in the biotech world, bioreactors, um, and machines that take raw material and produce a drug substance at the end of the process. And so we were looking at acquiring manufacturing capacity so that we could in effect manufacture a vaccine.
Hmm.
We were also looking at companies that might have been further along in the vaccine clinical process to acquire as sort of a leg up in the whole regulatory concept of commercializing a drug. Um, One acquisition we completed was for a manufacturing facility that initially wasn't in the vaccine world, but was set up
Hmm.
such that during COVID, we could get our hands on something that otherwise we wouldn't have been able to get our hands on. So we bought somebody else out strictly for those assets that you alluded to and some of the technical workforce, but they did not have any IP that we were interested in. It was
Hmm.
strictly, uh, stainless steel drums that are bioreactors.
Hmm.
Um, and we also wanted to position ourselves as an acquisition target for a larger, pharma company. And one way that we thought about doing that was having that manufacturing capacity, developing some IP, and progressing to a point in the clinic where we were actually more valuable than when we started.
Hmm.
And that's a novel mission. Often in biotech, there's a number of risks, right, throughout the clinical process. And there's also risks that people don't talk about as often that are in the manufacturing process. So actually making the drug itself can be a challenge,
Hmm.
not just analyzing how humans react to the drug. And so we were
Yeah.
faced with both problems. And
Hmm.
so we found ourselves in a really unique situation of having to allocate capital to both of those areas of the business.
Sure. And what does it take to actually manufacture a drug? Because there's probably a lot of approval processes as well, right? As you're kind of going through the FDA and kind of going through all the checkpoints that you have to go through to make sure that the drug is approved. I guess are like what's the timeline on these deals as well? Because I mean, I'm sure there's definitely dependencies on having to go through the FDA and go through all these other compliance requirements.
Absolutely. So, just for the sake of conversation, let's assume this pen is a manufacturing facility. We acquire the pen.
Hmm.
We can't start using this pen until this pen is certified by the regulatory body for being able to produce what we need it to produce.
Hmm.
And that's timeline dependent. And that could take anywhere between 6 months to a year to certify a facility. So just because I have this pen now, I wrote you a check for this pen, it's in my
Hmm.
possession. We're analyzing it, we're figuring out how to use it. We can't use it until you go through the process of regulatory approval. And that means everything about this pen has to be in ship shape, has to be clean, has to be um, frankly, there have to be people on hand that know how to use it, and those people have to be credentialed as well. So when you're making an acquisition, you have two things on your side. You have one thing on your side, and that's the money. You don't have the time always on your side.
Hmm.
So during COVID, everybody's going after, you know, the target, which is launching a new product. Anytime you tack on additional time to a clinical process, you're including additional risk.
Hmm.
And so when you're building your models or just building your conceptual model first about this, it's what's the likelihood of me getting approval to use this pen? I deploy capital, then there's a risk that I might not ever be able to use this. Um, I deploy capital, maybe there's a low risk that I will be barred from using this. and it's sort of weighing the pros and cons. And in biotech, often you don't have control of the regulatory process at all. It's out of
Hmm.
your hands. And so it's a huge gamble when you go out and you acquire an asset as a small biotech with limited
Yeah.
resources. So there's a lot of risk weighting, risk adjusting to the models that we build to drive the investment committee decision or the board
Hmm.
decision on an acquisition. And so models are important at times. Other times, common sense and developing people skills is more important than the models. Um, but during the global pandemic, it was sort of a mix of both. You had to be people focused,
Hmm.
had to have empathy, and you also had to have the ability to show the risks on a spreadsheet.
Yeah.
Um, yeah.
No, that's great. And then, the talk through a little more about the private equity strategy that you guys have in terms of sourcing, screening, execution. And then are you guys structured as kind of a single, partner kind of leading these deals, or do you co-invest with other private equity investors too? And how do you find these deals? So emerging private equity investors, what are some ways that they could kind of think through, maintaining a really great pipeline of um, of proprietary deals in their sector?
Yeah, absolutely. And I'm going to say something that might be controversial, but finding opportunities isn't hard for
Mhm.
us.
Yeah.
And I don't know if it's hard for anybody, but it's honestly finding the right opportunity. And we get a lot of co-investment requests as well. We have not co-invested in the past. We try to identify opportunities
Hmm.
that are naive in essence. We could be the first institutional um, capital or institutional service provider that the company has seen in the last couple of years.
Hmm.
And we want to be the only one involved in a particular deal or um, conversation where we're adding value through our consulting services as well, which is a whole nother side of our business. And we're
Yeah.
set up at Plocamium as a hybrid private equity firm. We've
Hmm.
been investing and owning and operating companies for 70 plus years. We are now trying to monetize some of the skills, the value proposition that we have is we have operating expertise and we want to make that a service
Yeah.
for your business.
Hmm.
We also have a balance sheet that we strategically deploy and help companies, cross a growth threshold, and we cross that with them through our hands-on strategic finance perspective. Lower middle market, we make checks from 20 to about 100 mil. Um, make one of those a year, two of those a year, and frankly, it's been about being a proactive networker. So
Yeah.
you might meet a business today, and then 5 years from now, uh, that's when you start working with them,
Hmm.
or you start working with somebody that they've introduced you to, and they remain a friendly connection in your network. So that's how we find opportunities.
Hmm.
We screen for opportunities strictly based on, you know, has this company been around for at least a couple years or longer, and how do they generate value? Is it sustainable? And we want to understand the people at the heart of the business. And that's sort of the final checkbox for us. We go in, meet people, walk the shop floor or the factory floor, lay eyes on the operation, and at the end of that, we come back, debrief as a team, and we decide: do we want to work with this company? Are we the best solution for them? Can we
Hmm.
actually help them? And if we can't, we introduce them to somebody in our network that we trust. And that
Sure.
works both ways. So that's another angle of
Hmm.
how do we source opportunities. Um,
Yeah.
so, yeah, exactly.
That's great. And then when you guys are looking at these companies, what's kind of like the ideal KPIs that you're looking for? I know a lot of people are looking at just the EBITDA. They want companies, especially on the private equity side, middle market. They're looking at companies that are anywhere from like 3 to 15 million EBITDA, and then there's some type of multiple that they come up with after all their research. So can you, and it sounds like you're mainly doing healthcare and manufacturing. Are there any other sectors you're interested in outside of those sectors?
You're exactly right.
Mm-hmm.
We are interested in healthcare,
Mm-hmm.
manufacturing,
Yeah.
and national security technology as well,
Okay.
which has been an avenue where we've worked in the past.
Mm-hmm.
And frankly, when we go out and search for companies, there's less of an EBITDA threshold or benchmark that we look for. And if the company's inside or outside of that, we excuse them. That's not how we operate. We
Mm-hmm.
operate on an enterprise value perspective. So we're looking
Yeah.
at not only the amount of cash a business is able to produce from their assets or the amount of money that's invested in them. We're also looking at uh, you know their debt and their equity and the particular market conditions that are at hand. And so our enterprise values that we typically work with are between 10 million and about 100 million. And you might say,
Mm-hmm.
well, that's quite a spread. And it really is. And frankly, each deal is different for us. We're such a niche boutique shop. We're a small shop. That's pretty much what those words mean when people
Mm-hmm.
say it.
Yeah.
I'm not afraid to say it. We're a small shop. We might work with one company a year. So that's how that spread works for us. Um, and I understand, certain firms have a tighter spread because they actually have LPs or investors who also have their own set of criteria. We're different from a lot of private equity firms
Mm-hmm.
because we don't have LPs. It's
Yeah.
our own capital. It's more agile.
Mm-hmm.
If I were to, use a word that's
Yeah.
trending right now.
Sure.
Yeah,
No, that's great. And I think when you're allocating, there's, I think the parameters vary on the type of business as well. So like I always like to think about like a software business, you talked about national security. So it could be like a cyber business where maybe it's making $30 million dollars a year. And it makes $30 million dollars a year, and there's no real labor that needs to occur. It's just kind of the software, and the software does all the heavy lifting. Everything's in the cloud. And then when you compare that to maybe a fashion manufacturing business that's maybe making 200 million a year, but the enterprise value isn't as healthy, and there's just so much that goes into actually the execution. Some might say the company with lower enterprise value with just more automation is more valuable because you could probably scale it much faster, much easier as you turn on some levers.
I think you're spot on
Mm-hmm.
that, and certainly the levers and the KPIs that uh, you know are important when you're
Mm-hmm.
analyzing a particular business. And I think they're sector dependent. So yeah, one KPI we look at is, free cash flow from
Mm-hmm.
operations. And if it's a SaaS model, we want to understand, is there a, market expansion opportunity, or maybe there's a product extension opportunity there. Um, and if it's like a fashion, a material, an object in essence, we also
Mm-hmm.
want to understand what are the innovation potentials on that business. Maybe there's an efficiency that we can introduce uh, on the existing line or manufacturing line,
Mm-hmm.
and that yields more cash flow, uh, to the business and shareholders in the long run. That could be a scenario that we work with that company for a
Mm-hmm.
year or two, and help them integrate that type of efficiency. And that could be a software platform. It could be restructuring the layout of their factory.
Mm-hmm.
It could be looking at synergies in the logistics side of the business or supply chain, um, which is obviously in the spotlight, um, and rightfully so. Um,
Yeah.
you know,
No, that's really helpful. And I would say too, it's kind of like really thinking about where the company is heading and, companies that you can actually add strategic value to increase the enterprise value by just you coming in hands on. One thing that I've been seeing recently, which is really interesting, is the whole consulting for equity model. I wrote a really long post a couple weeks ago, or maybe it was a week ago, but there's a handful of marketing agencies that I've spoken to recently, and their model before, and I'm seeing this across the board with other service businesses. I think I talked to you about this over the phone, but like there's I would say overarching, there's a handful of companies that generate a lot of great cash flow just providing a service or delivering a service, and a lot of times those services are to enterprises and to actual larger companies. And then what happens is they provide so much service and so much great support that those companies are growing in revenue, and they're losing out because the money that they're making is very static, right? Maybe let's say you charge a $20,000 a month retainer, or like if you own some equity in the company, not only could that eventually surpass your retainer revenue, but it'll continue to compound and grow over time, as the company is growing. So I
Mhm.
think that's what is really provocative about that. So I've seen these marketing agencies. This is kind of how it works, right? You're a marketing agency. Maybe you take on a startup client. You could probably get away with maybe super small companies. You could probably charge a retainer of like maybe $2,000 to $3,000 a month, and then as you get to like being a bigger brand and you're handling larger accounts, you could probably be charging high six to maybe seven figures at some point a month. But like they marketing agencies that I'm talking to are much less, right? They're probably at the 10 to 20K a month retainer price point. But what happens is maybe that client just doesn't feel that they're getting the growth that they're expecting for that price, and then they fire you. And now what you got to do is you got to go out and find a new marketing client, and you're kind of doing the same thing again. So you got on average probably a 3 to 6 month retention, and you may have to hold them contractually for the 3 month period. And that makes those customers really unhappy because maybe in the 3 months that wasn't enough time to actually prove that you can actually get them the growth metrics that they want. So you're kind of, as a marketer, you might be sacrificing some quality because you're just trying to get more volume of customers that are willing to pay for the marketing services. And there's just a constant churn, right? Unless you can figure out some way that the only way that you can reduce the churn is if you're strategically kind of inserted within the company. And then what I've been seeing, and this is what I posted about, there's the new marketing agency is not only doing marketing, they're helping you strategically with like your brand, your positioning, and then they're doing paid marketing. But now they have these services where they'll actually install a sales team, and they'll actually go out and have a team that will close the sales for you. And then essentially all you have to do as an operator is really just fulfill the business and focus on the customer. So the marketer now, they're providing a lot of services. There's a one-stop shop. You can kind of have that one team do everything for you. So I think on the marketing side, it's helpful because they now provide much more support end to end, and it makes them more sticky, but it also makes them more value add. I'd say the only thing as a founder is you kind of lose control, right? Because now you're beholden to the marketing agency. But that's kind of the pros and cons. So I don't know what your reaction is to that, but that's kind of what I've been seeing recently with like different type of service businesses. They add a lot more to the stack, so it's
Mhm.
just irresistible to not want to leave.
Yeah, I think that's a really interesting trend that you highlight in the piece that you wrote and that what you just um, mentioned. And
Mm-hmm.
frankly, first thing that comes to mind is like chief revenue officer as a service,
Mm-hmm.
and then under that, all the different other pieces, whether it's a marketing or price discovery team, and then the sales team as well. They would all report into a CRO or head of sales. But
Mm-hmm.
when you're leveraging a third party to do one of those tasks, let's call it marketing, and then they're also closing sales, you are offloading. Um, well, frankly, you're introducing a lot of risk to your
Mm-hmm.
business's continuity, especially
Yeah.
if there's a contract involved there. If they were to leave, you don't have anybody internally that has been closing sales.
Yeah.
Let's just say for the
And
sake
they could
of the
just
scenario.
and they could also just jack up the prices at like year one. That's kind of something that and then you're like, look, you just pay it because it's like too much of a transition to try to kind of migrate to your own system, right? You could lose so much revenue from trying to kind of do it on your own. So I think that's another big issue too.
Yeah. And you know what? I would also say, like, going back to like the data discussion, or what is data? And, look, it's been around for a long time. Data is created, not found. So if
Hmm.
that third party is, using any type of data, it should be yours as an entrepreneur, a business owner. Be sure that you are able to lock down your data, even if third parties are using it. You know, find somebody who understands data, from the legal side, and get a consultation and try to figure out, is there a way for you to own that, so that the
Hmm.
marketing agency has to go through you to use the data? So then if they leave, you still have access to everything that they were working with, and they don't
Yeah.
take the whole workflow with them.
Hmm.
That could be one fix, or at least a contingency to have as a business owner.
Yeah. No, I totally agree. And I can imagine that just when you're trying to get acquired, when you look at your enterprise value, that definitely is a huge risk, right? Just kind of seeing that everything is outsourced. So even for my businesses, I think it's great to kind of have some added fuel to the fire. Or if you can, maybe just hire an independent contractor and make them kind of augment your team. But I think offloading all of that from a buyout standpoint, I would see that as a risk. But I just think for the marketing agency, it's a great upside. So there's some agencies now that don't charge any retainer. They're just like, look, we'll do, we pick a few clients that are strategic. And, now they're doing this thing called, so beyond what I just shared, they're doing this thing called consulting for equity, where like
Mm.
strategically, if you're already generating a certain amount of revenue, they'll take money off of, sometimes it's usually off the top, so not even off the profit. But what's really interesting is you don't get the profit as like phantom. Sometimes when you get a revenue share, it's kind of like phantom revenue share, or kind of like phantom based on the valuation. This is kind of like monthly distributions in cash. So that can be very, very attractive if you've got a lot of clients now that are really growing in monthly recurring revenue, and it's compounding and growing every month. Because that means your distribution grows over time too, as you're providing more strategic support. So
Yeah, I think that's an interesting model. The other thing that comes to mind is, and I'm forgetting the name of this book, but it's one of the seminal startup books. And in
mhm.
the first couple pages, it talks about how the law firm that you choose to partner with at a very early stage, one way of compensation that startup friendly law firms use is, an equity stake in your business,
Mhm.
in lieu of a retainer or monthly, or a retainer, frankly. So
Yeah.
those models have proved, um, very well for the legal
Mhm.
community. So I can
Yeah.
imagine they prove well for the marketing community as well.
Yeah, it makes the lawyer strategically aligned. The other thing is you got to find another lawyer to review that agreement, right? Because that agreement is written by a lawyer. So that's the only thing you got to, because at some point there's some type of agreement, and then, I think the only challenge is like, if you go out and raise outside capital, what are the terms of that equity? Because that equity might get diluted. So sometimes there could be some terms in there that protects some type of dilution. So just kind of but I'm sure, look, they're founder friendly attorneys, and they're there to kind of, obviously reputation is everything, so they're obviously not going to try to do something that's predatory, I hope. And then I would say, even on the in the place I play, even on the fund manager side, I look at every single fund manager as a startup entrepreneur as well, right? You still got to build a website, you still got to meet customers who are LPs, you're building a brand, you're generating essentially recurring revenue yearly, or maybe even monthly, based on how much assets you're raising, right? Which is a sales process. So even with that, there's a lot of great fund managers that have grown to be friends of mine that have just done a lot of value add stuff. And, both of us are kind of, experimenting with content. I think content is the most least invasive way to engage with partners because they're consuming your knowledge, your subject matter expertise, and they're also, hopefully getting some value from what you're sharing. So I think, anyone that's like a business owner, I think, social media is definitely a great way to get customers. But in my opinion, it's just much slower, right? Versus just doing paid ads, you got bookings on the calendar. But like I think, in my opinion, like when you do paid ads or you do some type of demand gen marketing, the social, I feel, is the background check, right? So they had a
Mhm.
call with you, they got to know you, but now they're like, hey, who is this person? What is this business? Now they see all these videos and all this free content, all these free downloadable templates. So some of the attorneys that I partner with, for just value add, I'm like, hey, can you give me a free template, or can you give me some Excel model that my community can download, because it's valuable for me, because I can just share that, and then if I put that that service provider's logo, then now there's a click back to their side. They get some attribution, and there's some way to kind of get back to that service provider. But I know we got 10 minutes left. I'd love to dive a little deeper into your research business, and kind of maybe share some high level things that you're writing about and sharing,
Sure.
and happy to plug it with this episode too, to kind of hopefully have people learn about how they can get this knowledge from you and work with you. So maybe share some of the services that you're providing. And I think that's really cool that you took your practical industry experience, and you served kind of your employer, and now you can pretty much provide that same access and services to like-minded potential clients.
Yeah, absolutely. And yeah, Joel, I also think media production has become more prevalent in the last
Yeah.
couple of years,
Hmm.
especially when you look at the private equity community and all the videos and other types of content
Hmm.
that is being produced. Um, and I've tried to get into producing certain types of media,
Hmm.
whether it's video media or even content that I've created on our website. Um, we have a part of our firm that's focused on uh, non-US markets, and we
Hmm.
call um, that team the Global Insights team. And I've written a couple different articles about recent investment trends that we're tracking, but also are just generally good to have
Hmm.
as a understanding of the future. And one of those trends is in fact energy and data centers. And I think, frankly, energy affects every sector, whether you're healthcare, materials, or the defense environment.
Hmm.
Data affects almost every sector you can think of:
Yeah.
healthcare, fashion, anything you can think of. And how do you power the creation of data and the analytics of data is a top of mind question for not only governments, but corporations.
Hmm.
And so I've written a couple pieces on that. Um, and they're all on our website, plocamium.com. And we offer companies a variety of services, uh, pretty much everything from due diligence. We perform geopolitical analyses, financial, operational um, products. We advise on transactions, as well as given our network of lenders and other advisors that are needed in a transaction
Hmm.
process. We connect companies that work with us with those firms,
Hmm.
and we do quite a bit of market analysis. So, for instance, a private equity firm came to us last year wanting to learn about the national security opportunity in the US. And
Hmm.
we produced research for them to help them become educated. And then we also introduced a number of companies to them, and they ended up investing in one of those companies. And so we work with them on the value creation side of that as well. So that was a very interesting process. And we also produce studies. So some of our clients have highly technical processes, but also products and
Mhm.
intellectual property that surrounds both. They might want to do an academic research project or a study that they have commissioned by an academic institution to further validate themselves as leaders in their space. And so we have a number of scholars and research specialists that come on board as necessary to help these companies produce that type of research. And we facilitate that from start to finish.
Mhm.
And we have a general report here that really goes into a deeper dive of some of the services that we provide. Um, Healthcare, defense, packaging, and manufacturing are our sweet spots. And some of our clients have been private equity firms. We've worked with a variety of sovereign entities,
Mhm.
as well as small to mid-sized family-owned and operated businesses. And we've been their advisor for growth
Mhm.
for a number of years.
Yeah. Yeah, one thing that I've been seeing in my ecosystem too, because we are the accelerator for fund managers. I'm seeing a lot of family businesses that are kind of saying the same thing that the marketers are saying. It's like, look, you know what, supporting all these really great clients, but they just need additional capital, and I would love to kind of provide that capital because I know what type of equity stake I would have, and possibly have like some type of buyout, right? So you can get paid like probably three more ways on top of kind of the initial way that you're getting compensated if you can kind of do those additional downstream activities and be the one that does it best. Um, so look, we got 6 minutes left. I wanted to kind of just hit one or two more hot topics. So, one thing that I've been kind of semi nerding out on is not life extension, not longevity, but actual health extension. So,
Sure.
once you start hitting the age of 40, you're supposed to actually do more lifting, because you start to slowly lose some muscle mass. So that's one thing I've been personally trying to get back into, just doing a little more lifting and exerting myself more for like health extension, right? Like, I mean, what a lot of people are saying, I already mentioned this in my last episode with someone else that was focused on healthcare, but, I
Mhm.
personally can't think of the last time I've actually done a sprint. I ran track. And if you think about it, most people don't do a sprint after their 30s. Like you probably do it a lot, like in college, if you play football or if you run track, it's just part of your everyday thing. But going out there and doing like 100-yard sprint, it's not something that you're doing, and everybody doesn't have access to a track to do that kind of interval training. But what are your thoughts on what Brian Johnson is doing? Kind of being the person with the healthiest biomarker on the planet, so he claims. With a lot of engineering and some of its experimentation too. But what are your reactions to that, and kind of where some of your thesis is maybe slowly exploring?
Yeah, absolutely. And, similarly to you, it is difficult to find a track, especially when you're traveling
Mhm.
and find a good place to stay fit when
Yeah.
you're on the road. And look, frankly, uh, what Brian is trying to accomplish, I think, is out of reach for the vast majority of people. But I think
Mhm.
it's a great uh, let's call it a great use case or example of what can be done
Mhm.
if
Yeah.
resources
And the
were
cost can go down.
unlimited.
Yeah.
Yeah, absolutely. Yeah.
Yeah. And
And
I
I
think
think
he's
there's
trying to open source some of that stuff. And, I think on the back end, he does have some links to go ahead and buy his olive oil and some of his supplements and stuff.
yeah.
So for him, I think there is a monetization there. But I think that would be pretty interesting if you had some type of kit, or, he calls it the blueprint, some type of way. I mean, I mean, small things, right? Like there's ways that you could I think there's a startup out there where you can actually go out and get your blood work and get some of that data dynamically versus going to the hospital and downloading the app and seeing that, oh, my levels are borderline, and you get like a DM from your doctor to just, reduce something, right? So I think there's like artificial intelligence now that can kind of augment some of the support that you need. And it's not Joe Rogan, but who's the CEO of the UFC? What was his name? It's
That's a good question.
I forgot his name, but anyways,
Yeah,
yeah, we can look him up.
something white, right? That's
Yeah, Kerry White. No, it's no, it's Dana White. Dana White.
White.
So
There you go.
Dana, I guess he was sleeping. He was suffering from a lot of sleep apnea, and he was just, he went on some podcast and he's like, look, I don't go to the doctor at all unless I'm injured. I break my arm. I got to go to the doctor. But just to, track general health, a lot of that, if you do your blood work and you kind of get some of that data, you could probably figure out if you're doing well or not. And what he was saying is like, look, if I just go to the doctor, they're just going to stuff pills down my throat. So I think, some of that stuff, just if you have your own data, you could probably, diagnose yourself. There's been times where like I've just kind of looked up stuff in ChatGPT and I'm like, hey, how are these levels? It says it's normal, but hey, can you give me some deeper context in terms of like, and just kind of some more detail in terms of like what it is,
Yeah, I fully support that. I think ChatGPT is a great resource for
Mhm.
benchmarking and
Yeah.
sanity checking.
Hmm.
And just one last point is, yeah, it is our data, our health data,
Hmm.
actually ours. And that is a whole nother discussion.
That's a whole
But
IP that hospitals are gating as well, right? So
yeah, and we should be in control of our data and our health, to your
yeah.
point.
Hmm.
Yeah, that's a good point that you raise.
Yeah. Absolutely. Well, hey, James, this was awesome. We covered so many topics in such little time, and it was good getting to know a little more about just your family businesses and just kind of your take on healthcare and PE and buyout. So, really exciting discussion. I can keep going as but really enjoyed it. I'll let you go. I'll let you off the hook and let you enjoy the weekend after this one.
Hey, thank you so much for having me, and you do the same. And we'll connect next week. Hopefully, this was a real pleasure and delight.
Yeah, likewise, James. Take care. Have a good weekend, and
All right.
everybody else as well. Take care.
See you guys.
All
Bye.
right.